Morning. Come on, Talibou. All right, let's get going. Another awesome currency trading day. Just a little morning music. So good morning. It's a Tuesday. Great opportunity to be a currency trader. Today I recommend that we go through dollar pairs, yen pairs, what other pairs you want to do. And just ask questions. Before we start, would you please subscribe and like? And then we'll get to it, huh? Let's go. So good morning. Hope you're doing well. Let me move this out of the way. Hang on, the chat's not quite working for me. Hang on. Hang on! Come on. There we go. Boy. I guess I am due for a reboot. Hang on, almost done. Anyways, yeah. Hey, nice to meet you. My name is Wayne. I'm a currency trader. I want to hang out with you for the next 90 minutes. Let's go through these pairs. Let's look at some commodities. What's oil doing today? Oh my gosh, it's just falling and falling and falling and falling and falling and falling forever. Imagine if you were the type of trader that just kept buying and buying and buying and buying on the way down. You're either going to get very, very poor, very, very rich, depending if it ever goes up. So, hey, Gaming Battle. I'm in Georgia. Where are you? So anyways, we'll go through the charts, see what's out there, see what's changed, see what's the same, see what's different, see if we got opportunities and threats, all that kind of stuff. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. And like I said, since we're here at the Forex.Today YouTube channel, please click subscribe, because what happens is when I start to stream, you'll get a notification. If you click on the little notification bell when you subscribe, it'll say, hey, Wayne started streaming. Would you like to attend? You click a button and it just brings you right in. It's super easy, makes your life awesome. Eurodollar, please. Okay. Thank you, De Niro. This is for De Niro. Gaming Battle says, where, America? No, Georgia. Australia, very nice. Where? Where in Australia? Brizzy, Sydney. Don't say Perth. Don't say Perth. Yeah, well, thank you for finally attending, Allie. We appreciate that. And I got to set up my screens a little different on the webinar desk, because I feel like I'm always looking down here, because obviously I'm looking at the chat, but I want to be looking here. But then what do I do? Do I put the chat there? And I don't know. Anyways. Yeah, I know. Not Georgia, the country, of course. No. Grace, you know what? I'd like to do a Singapore get-together somehow. I'd like to do a trading weekend in Singapore. So, Slovenia. I have great friends in Slovenia. What a beautiful country. Anyways, okay, let's just get going. All right, so I started out the month, even though it was falling, I started out with the basic premise for Eurodollar that I want Eurodollar to go up, not necessarily because I like Euro, but because I want dollar to weaken based on positive global macroeconomics. Now, the U.S. economy, I think, is mid-cycle. I don't think it's late cycle. I think a lot of people are running around that don't know how to analyze, and they're freaking out that this is the end of the world. And of course, it's not the end of the world unless you're the type of person that runs around freaking out. Great. So I don't think it's the end of the world, but I would like dollar to weaken because that is a positive thing. But there's a couple of things going on here. Europe is still not amazing, right? Like the data that's been coming out, right? So that's a real drag. So what, a year ago, I wonder if we could even back out there. A year ago or so, we had this nice rally. What a great rally, right? And the economic data was good, and there's talk about, you know, the ECB changing things because there's no need for quantitative easing, and so they should change their policies and all this kind of stuff. Then the data got kind of poor. Not terrible, excuse me, not terrible. There was like the Italian scare, if you will, that that was going to collapse on them and all that kind of stuff. So that kind of started this, but the euro recovery, the eurozone recovery is almost like a myth at this point, right? Like, it's not getting significantly worse, I don't think, in most cases. But it's very lethargic, this recovery. Like, I don't know if there's any. So over here, year-over-year growth was amazing, and now year-over-year growth is probably stagnant. Is it like the banking sector? Maybe. Is it the socialist pig dog movement in Europe? Maybe. Is it Brexit? Maybe. But nonetheless, I'd love to be selling dollars. But this is really dragging it down, right? This big question. And then, of course, what I've tried to explain over the last 5 to 10 years to you guys is that the euro lethargy or stagnation really, really impacts China, you know, almost more than the United States. Because when you look at the Eurozone as a total, it's more people than the United States, right? And since about, well, I guess in this period, there was a recovery in economic data. And so people would say, okay, the bottom of the cycle has happened. European assets are cheap. Time to buy it up. Dollar weakens. Euro increases. And during this period, Europeans would be expected to feel stinking, you know, filthy, stinking rich in the European sense of the words, and then start buying, you know, imported goods. But they didn't. And in fact, if you look at the import-export data for the Eurozone, Europeans are generally not importing anything, which means, yeah, they're buying local, but they're not buying Chinese, right? So that slows the Chinese economy down, and then that doesn't help Aussie and Kiwi and CAD and all this kind of stuff. So right now, this spat of dollar strength, you know, look how long this was, feels like it's disappointed in macroeconomics. And that's that. And I would really like the Eurozone to get their act together so that it's not just the United States worried about inflation and end of cycle. Europe is still hoping to get into cycle and into inflation. So I'd like to have a little more economic activity out of the Eurozone. So how do we do it? So Europe is trying to create inflation, and oil's dropped from $60 to $50, right? That's deflationary. I thought that rally from 40 to 60 would create inflation in Europe, and it still didn't. Amazing to me. Amazing. So anyways, let's go into here. What we talked about over the last couple of days was that when we're up here, I'm like, okay, yeah, it's probably going to come down a bit. It needs to, profit taking, all that kind of stuff. But our plan as aggressive bulls was to buy this dip to it's a roll reversal to a central pivot, a higher low, that kind of thing, and rally up. And then it breached that, I guess, Thursday afternoon or Friday. Oh, just saw Will's question. Why is Europe not importing? They're poor. So I just wrote about this in my paper about, the lowest part of the income for a country, like the lowest wage earners in any economy have the highest marginal propensity to consume. And in fact, when you look at the United States, when you're at the poverty level of $12,700 a year and you're given money, you spend every penny of it. Why? You need clothes, you need food, you need shelter, and you need Netflix, right? So you got all that. What happens if someone gave you, you make $12,700? What if someone gave you $5,000? How much of it do you save? None of it. Boom, you spend all of it. And then, right? And what do you spend it on? Simple stuff, right? But not luxury stuff. You're not buying Louis Vuitton because you got a $5,000 government payment. So you're going to say, well, screw the trailer park, screw the kids, screw the ex-husbands. I'm going to go buy a Louis Vuitton purse. It just doesn't really happen, right? So when you're poor, you don't do things like, let's go import some very expensive foreign-made goods. And it's kind of like that. Now, you might say, well, importing might now be like T-shirts and stuff. Yeah, okay, maybe, but think more generally when you're doing economics. Okay, if you're poor, you don't leave your town, you don't buy foreign products, you probably all this kind of stuff, right? You're not buying LG TVs and Samsung refrigerators and stuff like that. So anyways. All right. Now in America, America's booming, and I mentioned this maybe 6 months ago. I went shopping because I rarely leave the house, let alone go shopping, right? So I go shopping, and I am dumbfounded. The people were buying stuff in this store so fast. The next thing would be like people fighting over stuff. So I saw this couch, nice couch. It was Tommy Hilfiger made this couch and had 2 matching chairs, right? So I'm looking at it. I'm like, yeah, it's nice. And I look at the chairs. I'm like, okay, that's stylish. That's kind of cool. Would I put that in my basement and all that kind of stuff? And I'm hawing. And then someone came over and bought one of the chairs. I'm like, hey, this should go with the whole set. And she's like, no, I just need this. And she took one of the chairs. I'm like, damn that bitch. That was good. So now I'm like, I better get serious about this couch and this one last chair. So I go to the other side of the store and I find my wife. I'm like, hey, I found some Tommy Hilfiger couch and chair, and it seems to be popular, and people are looking at it. Someone already bought a chair, and we go back, and the couch and the other chair sold. I'm like, what? Oh, my God. I was too slow. Like, I felt bad. Like, next time I'm showing up, I'm going to have, like, wads of money. I'm going to have my tennis shoes on. I'm going to sprint through the store and buying stuff, because if I'm too slow, someone's going to buy it out from under me. It's amazing. Absolutely amazing the amount of money now in the United States. It's crazy. So I don't even go shopping anymore. I'm like, so another example, I just bought a tricked out golf cart because I don't even own a car. So I bought a golf cart. I had it custom made, custom painted. I got custom wheels, custom paint job, added speakers to it, and it's got turn signals, and like I wanted a license plate that said baller on it. My wife's like, you can't do that. I'm like, yeah, you got to be a baller. It's raised, but it's also got low profile, oversized wheels. So it's big. And so anyways, I go to the golf cart. There's like 5 golf cart places here in my city. And I go to the first one. I'm like, yeah, I want to buy one. And I'm like, how about this one? And then someone comes out, like a family with the kids and everything. And like, yeah, we'll take that. I'm like, that's the one I want. And they're like, yeah, we're going to take it. I'm like, damn, this is like buying that couch. So like, and then I go to look at another one and they're selling. And I talk to the owner. I'm like, is it always like this? And he's like, yeah. Just like, do you want it? If you want it, buy it now. If not, get out of here. Because he doesn't even need me because they're selling them so fast. He's like, yep, here's the price. This is what you get. If you don't like it, get the hell out. I'm like, oh my God. So I call a place like that's an hour and a half away on the other side of Atlanta. And that part of town, they don't even have golf cart paths like my city. So it's a place where you wouldn't even need golf carts. I call them up. And they're selling them as fast as they can put them on the lot. These are $5,000 to $10,000 purchases. They can't get golf carts fast enough. So I find the one, this custom one. So I buy it, and I'm like, why don't you throw a delivery for free? Because he's charging me $150 just for delivery. And he's like, you know what? If you don't want it, I got someone else that's already in line. I have their credit card number. They'll buy it right now. So if you're not interested, just drop it. I'm like, oh my God, okay, I'll take it. And then he laughed when I paid. He's like, oh, yeah, that couple that was going to buy your golf cart, they're in your city. I'm like, so people are now going an hour away, hour and a half with traffic each way to buy a golf cart for my city, because there's only 5 places in my city that do golf carts, and they sell them so fast. I got to go an hour and a half away, and they can't get enough golf carts because they're selling so fast. That's the economy we live in. Like nuts. Like I'm literally going to have to fight people to buy something because there's not enough stuff here to buy. And like I said, these are $5,000 to $10,000 super upgraded, awesome hot rod golf carts. And when you go to like one of these stores, when I say one of these stores, it's not like they have 2 or 3. They have dozens and dozens and dozens, and behind they have dozens more that they're customizing. So it's crazy, crazy. That's the economy here. I don't think that's happening in Luxembourg. Yeah, wait till Christmas and Black Friday. Like that's what I'm saying. This, like, the couch thing was in the summer. I'm like, I want to buy a Tommy Hilfiger couch and 2 chairs. That's not a small random purchase. I'm not buying food, clothing, and shelter like a poor person or someone that's worried about their job or someone that's worried about whatever, right? This is all part of economics. And if you expect to lose your job, or you're not certain about your job or your income or your household wealth, this all affects marginal propensity to consume. So if you think you're going to run out of money, you're not going to buy luxury goods, right? So this is me measuring the United States economy. So like, dude, Tommy Hilfiger couch and 2 chairs. I mean, yeah, that ain't Walmart, right? And all of a sudden, I wasn't fast enough with my money. I had 10 minutes. So you're going to buy this? Boom, gone. Holy crap. Same thing with golf carts, right? These are not small purchases. So what does this mean? Well, what as an economist now? So we start first as economists, right? Then we become technical analysts. So you start as an economist, then you become an analyst, and then at some point you become a trader, right? So I like walking around. I like talking to people. I talk to the cabbies. I talk to the person at the cash register. I talk to the waitresses. Almost always the owner comes out and talks to me because they see I'm asking questions. So I'm talking to business owners and stuff. I talk to everybody because I'm an economist first and foremost. How's the economy doing? F you, get out of the way. People are going to buy stuff. I don't have time for your questions. Okay? How about this? Here's another example. I spent a couple of $100,000, doing my theater and my office and stuff just recently in my basement. And we had a signed agreement with a contract company, very well-respected contractor company, to do some work upstairs. $30,000. We've already agreed. I've already got a signed contract and stuff. And I'm like, yeah, I got to go to Harvard. And when I come back at the end of June, you can start again, right? Because I was away for the summer. So I get back. And he's like, F you, I'm not doing the project. I'm like, what do you mean? He's like, no, I took you off the schedule. I'm doing another project. I'm like, no. I'm on the schedule. We have a signed agreement. It's $30,000. He's like, I'm not interested. Sorry. Wish you the best of luck. I'm like, no joke. Threw away. I'm like, no, it's too small. I don't have time for a stupid $30,000 project. Find somebody else. it's like, so what, as an economist, what kind of economy are you in if people are throwing away $30,000 jobs because it's not good enough? Holy crap. Holy crap. Is it like that in Europe at the moment? No, I don't think so. I don't live in Europe, but I don't think so. So that's how, we need, so for that, I need to go to the ECB and get, that kind of stuff, get ECB economic data that I can compare. Well, how does that feel next to my American economy? How's Australia doing relative to my American economy? So on and so forth. So therefore, I can create my economic fundamental bias. And then once I have that, then I now know if I want to be a bull or a bear. So then I can go to a chart and I can become a technical analyst now. And I start looking for opportunities to, if I was a bull, to buy, or if I was a bear, to sell. That's where technical analysis comes in. Okay. Oh, it's PIMP for sure. Do I have it? I don't think I have a freaking picture. I might have one on my phone. PIMP. So like that's how I live my life. I'm always a currency trader. Do I have one? Oh, here it is. I changed the roof though. So this is the one where they put a different roof on. So I got the better roof now. It's baller, right? I got the car lights on it, turn signals, oversized, not 12-inch wheels, 14-inch wheels, right? Boom. PIMP, man. Look at those wheels. Low profile. This is what a golf cart looks like normally. That's mine. PIMP. Yeah, another gangster, right? Did a gangster. I like a wingster. So anyways. And I had to fight. Like, I was so lucky to get that. I tried to negotiate. I'm a pretty good negotiator. I didn't get any discount. He charged me $150 to deliver it. Like, it was sold already. I totally believe him. No, Mr. High Volt. Hang on. Gee whiz. Got to work on your patience, dude. Amazing, dude. You got to remember, patience is a big part of trading. All right. So anyways, what we talked about yesterday, High Volt, was we wanted a plan B would be here or let it fall. And then into this area. When we were still here, I'm like, yeah, probably going to fall down here. And then this whole idea was, I kind of want it to prove to me that there's a change, right? So we're not quite where I would even look for a bullish move. Okay? Oh, Peter says, what's that for? Well, see, I have hundreds of miles of golf cart paths in my city. So people drive to the grocery store. That's where I typically drive. To cafes, to restaurants, to bars, to rock concerts, to the schools. So when you go drive by the high school at 3:30, it takes about 40 minutes. You stop on the road, and for 40 minutes, hundreds and hundreds of golf carts cross the street, but with crossing guards. Hundreds. It's redonkulous. Okay. So anyways, this isn't where I wanted to buy, right? It's plausible, it's an S and all that kind of stuff, but I'm just not really interested. So if you're a bear now, you're looking to buy a rally here and then drive it lower, okay? Sort of like that is the general idea. I don't like any of it, really. I really don't. Mostly because I'm looking for something different on a macro level, so I'm filtering a lot of stuff out. Okay. So I don't think there's a major reason to be bullish at the moment. You see where we are here. That's not a major reason to be bullish. So if you wanted to continue to be bearish, you certainly can. We have this drop and then this breach of the 1 hour, okay, which is not amazing if you're a bear. It just means you need to wait a little bit. So maybe up to the 4 hour and down. And that's why I have it that way. Okay. So it's not too different from yesterday's trade plan. Well, in fact, it's the same as yesterday's trade plan. And we did that twice yesterday, so you should have a good sense of that. Do you have a license for that thing? Yeah. You do need one. Michael says 2-lane paths. Well, there's enough for to people go by. Now imagine lots of people walk their dogs and jog and all that kind of too. So it's my city is the only city in the United States to be on 2 top 10 lists. It's in the top 10 to raise children, and it's in the top 10 to retire because there's such good facilities, low crime, great housing. The country club has 4 golf courses and 4 clubhouses. The best schools in Georgia, that kind of stuff. So it's a very good place to be young, and it's a very good place to be old, and everything else in between is pretty decent. Oh, I can't tell you, NP. So anyways, all right. Look at this. Look at this, what we did. We had this as a drop zone, and it dropped. We had this as a buy zone and a bot. Dropped, bounce. What? Amazing, right? Look at the up, the down. There's your buy, and off you go. Right? Now, the interesting thing, like if we go into a smaller time frame, we had this as a buy zone. We had this as a sell zone. Look, even the bears would have sold it off of here and done all right, and then it double bottomed. So at some point, you have to ask yourself, when do you declare a higher high? I'm trying to update this. Okay. When do you declare a higher high? Because that sets up a higher low at some point, right? You say you're a gangster. Da, 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 da. I'm just joking, MP. Okay. Is that your trade plan? Okay. Do you declare that a higher high, higher than this stuff? That's all it is. Remember, we had this as an area of interest, and now we're back into that price area. Okay. What do you think? Would you do that if you were a bull? Look at the bearish front run on Friday. Okay. Let's also go back through that now that I've said this. All right. There's a Friday front run if you're a bear on pound dollar. There's good reason for you to be a bear. Okay. So it's very, very, very plausible. You got your awesome entry. I mean, that's beautiful. Now, then it actually fell. So you don't know at the time. But if you're a bear, you certainly can take the shot. Okay. Now we're down into here. Okay. On a Monday, what did we talk about? Potentially that could happen. That can very often happen in this situation. What happens here? What does this set up? Hello? Well, it starts out for profit taking, sets up a counter trend trade, and back to the central pivot, which is here. Now, I would say this is close enough, but anyways. So it's one of these things where it's hard to believe at the moment, right, that it would fall that far, that fast. How could we be talking about a counter trend? But like I said, it doesn't always happen, but it very often does. And the whole point is that you know it doesn't start out because bulls are buying. It starts out because bears are taking profit. These guys here are taking profit here. And then if bulls do show up, okay? So that's the thing. And another reason, a way to think of it is whoever shorted, like whoever had a short position for the week, that is the target. So they're done. Now you're saying, well, it's only Monday. So what if it was an algorithm? Right? What if it was an algorithm that said short this simply because it's resistance? And time goes by, and then it opens up here on Monday and it says, oh, weekly pivot profit zone. Does it say, oh, but it's only Monday? No, it's just like, oh, that's where I'm supposed to take profit. Check, take profit. Okay, Joe is asking a great question. Joe says he's torn because there's a reversal pattern here, but there's a 4-hour 21, which is bearish. That's why you have to have a bias. You just nailed it. So how do you know which one? Well, nobody knows which one. But if you're a bull, you would have grabbed this. We talked about it. I mean, clearly, and for all these reasons, it's clearly an opportunity for bulls. Now, it's counter trend, so it's a little risky, but it's definitely there. And then you're like, oh, but if I switch over to the 4-hour to 21, so that's where bears would sell. Yeah, bears would sell there. So the reason you're torn is you haven't, you haven't committed to one or the other. So both look like great opportunities. Both are great opportunities. A bear would certainly sell right in this confluence. Resistance, resistance, resistance. A bull would definitely buy there, support, support, support. Okay? So you got to be one or the other. So this is why, at this point, you set it up like a dip, because you assume some bears are going to sell here, right? You can say to yourself, this is where bears are going to sell, so it's going to come down, but the bulls are going to take them over, so I'm going to be a buyer at this price, or around, what do you want to call it? We're at 121.50, so 120, 125. Okay. Well, there's no reason to be skittish. You're either a bull or a bear. And your reasoning can be as simple as Brexit. Okay, bearish. Done. Next. Okay. Because he's a wankster. Ba-ba-ba-da-ba. So anyways, true story, the stereo system, the Bluetooth stereo system that came with it, it's not that good. So I'm gonna put better speakers in with a 10-inch subwoofer. Boom, boom, boom. Boom, 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 boom. Yeah. So the economy is doing all right. All right. So we did that. All right, let's do, I want to do oil. Let's do crude, because it's another litmus test, if you will. I'm just fighting this, huh? Just nuts. I want to go up and then da. So going back to yesterday, we had, this was support. This was, this was monthly support. This was weekly support. So I was hoping for a rally, which we got. Then I would like a dip, a rally, a retest, and up, right? Conversely, I said if you're still a bear, you remember me putting these arrows? I said you would sell it right here at the roll reversal. And if that didn't work, you'd sell it up there. Well, plan A worked for bears. Boom, done. Easy. Easy. And son of a gun. So it may be against what I was hoping for, but that's not a complicated trade. Let's look at it this way. Okay. So I was hoping for up, and I had every right to plan this as a bull. Oops, that's the wrong one. Undo. Okay, I have support here. So I have confluence of support. This would be a great place for bears to get up. Okay, I can do that all day. Delete. Then it should pull back, and it kind of did. And then if it were to be bullish, it would rally here, which it kind of did. I mean, it did for 3-4 hours. And then it was supposed to make a higher high if it was bullish. And then it would dip and come to a roll reversal, which we have identified here. And then it would head up to the next level. That was our plan yesterday, if we were bulls. Now, the plan A for bears now, how would you set this up? Right? Well, it's a little bit dangerous because we have this confluence of support. We see all the same things. But as bears, where would you sell? Plan A and plan B. And it just worked out beautifully, tickety-boo. And that's kind of the whole thing about bias. Because I don't know where this is going to be in 24 hours. And you don't know where this is going to be in 24 hours. And none of the bulls know, and none of the bears know. Nobody knows. It's, I would say, nearly impossible for you as a trader with no bias at all to be consistently right. Okay? You understand? And isn't it consistency something that's supposed to be important to us? Low volatility, consistent returns, all that kind of stuff. You cannot control the market, but you can control your trading behavior, right? So your bias is supposed to filter all this out. Like I've been trying to filter out all this bearishness. I want it to go up, but I'm doing things like asking it to prove to me first before I start buying. And it started out really good. I had a good case. All it had to do was bounce here and make a higher high. I mean, it bounced here. It did the 1, 2, 3. It went up into here. It came down. And then it did everything but rally, right? Great. But this is why bears need bulls, because bears want to sell up here. So they need it to rise so that they can sell high. They don't want to sell down here because they're bears. They want to sell up here because they're bears, right? So if you want consistent returns, you have to have a bias and then set trade plans up. So remember, your bias comes from your economic analysis. Then your trade plans, your strategies come from your technical analysis. And then your skills as a trader help you carry it out one way or the other, things like managing stops and stuff, right? So in this case, I was not a bear, but if I was a bear, I would have sold that all day long. All day long. It fell, what, 2.5% yesterday? Just like, it's ridiculous. What does it mean for macroeconomics? Well, we either have too much supply or too much demand, and I did all that, I think over here. I did a whole supply and demand curve and shifted them, and right? And I'm just sort of walking and waiting. Yeah, and then there was some Trump stuff, but, you know, that's fine. Let it happen. You just don't want to be the person that, in that situation, lose a lot of money. I'm trying to teach you, like, I want it to go up, right? I'm very clear. I want it to go up, and then there are places where I'm setting up bullish trade plans, and then I'm like, I might not even take those. I want it to do even more, and I want it to really prove to me before I start going in. I don't need to be the first trader. Remember me saying that? Like, I don't have to be the first trader into these trades, but I'd like it to do this so that I know there are bulls, and if there are, then I can take the next wave. I'm doing stuff like that. I'm trying to teach you to have a bias, and then what do you do when the market conditions are not favorable to your bias? Well, the most important thing you want is to not lose a ton of money. because you're stubborn. You're like, well, Wayne told me I have a bias, so I'm going to keep buying on the way down. Whoa, 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 sailor. I never said that. I said you're supposed to use your technical analysis to analyze market conditions and wait for market conditions to be favorable. Okay? That's where I'm trying to get you. In this case, I just cannot get the market conditions to favor my bias, and therefore I just keep waiting. Yes, we're at monthly support. Yes, we're at weekly support. I expect it to come soon. Like literally today, tomorrow, the next day, I really do expect oil to change direction. Why? Because of my technical analysis of the market. Now, it's a fundamental move, but when would bears decide to stop being bears? When would bulls start to wanting to be bulls? Well, that's what technical analysis is. So that's why I'm right. That's what I'm trying to do. And I'm trying to teach you to be patient, and I'm trying to tell myself to be patient. All right. That being said, if you want to be a bull on gold, you have permission to consider. Okay, let's take a look at that. There's your S1. M2, sorry. That's perfect. That's exactly what you want. So now as a technical analyst, what would you recommend if I was a client, I'm like, I'm a bull and I want to be a bull around 1200. And you say, well, good, because we just bounced off of a key pivot. You know what I mean? There's a key pivot. Great. Now what would you recommend as a technical analyst? Probably a higher high, higher low, right? Probably off this area. So let's just call it that pivot. And then what? Maybe you like to fib it? You like to fib it? You like it to fib? Huh? You like it to fib? You like it to fib. Right? So you're like, yeah, something like that. Once again, fundamental first, technical bias or technical analysis to set up trading patterns that confirm or deny your bias. Okay? So I'm trying to teach you, A, to be an economist, B, to be a technical analyst, and C, be a trader. These are three different things I'm trying to teach you all at once. You are not alone. You're going to miss it, aren't you? Can you see the day trade there? Michael says, can we correctly get bias? Well, it doesn't necessarily tell you bias. It tells you position. And it's a little bit old, but you could certainly put that in your repertoire. Absolutely. But in that situation, though, you very often just get like, well, all the smart money is long. Well, then what are you? Right? I'd rather you say, well, the rest of the smart money is also long. But sure. Okay, just make sure you're using it properly. A lot of people will use all this stuff to justify their really piss poor trading. And like buying on the way down, you're like, well, everyone else says they're bullish, right? Just simplify everything first. Maybe you just look at a long-term chart. Is it going up or is it going down, right? Like maybe you look at this. Where are we going to be in a year? Maybe it's just that simple, right? Or maybe you do it even less than that. Like, all right, so we have a break of a channel, right? So you might say, well, as long as we're below that channel, I'm a bear. Done. See? Done. And that gets you probably 3 months worth of trading. Okay? Or if you click in a little bit, you say, well, we haven't made a lower low in so long, so now I'm a bull. Okay, great. But make a decision, right? You can use, right? You know, the funny thing is, one of the pieces of advice that most people just fight me tooth and nail to the end is when I say, go to the central bank. So like, go to the Bank of England and start downloading reports and reading them. Okay? And it's probably the last thing you end up doing. The very last thing. And then you start reading it and you're like, oh my God. The central bank reports specifically and clearly tell me the future. If I had only done that a year or two ago, it would have been so much easier. You'd be shocked how clear these reports can be. And then you're like, well, where's all the confusion in the market? Like, why are these hedge fund managers and all these people on TV and stuff, like, why are they not on the clue train? And then then the second wave will hit you. And you're like, oh my God. It's because they don't do the homework either, right? Like, nobody does the work. So if you want to be the smartest person in the room, like, simply read what the central bankers are telling you. It's amazing. Right? It's pretty amazing. So, you know, of course, now with the pound, the big question is going to be whether Brexit's the problem or not, right? But anyways, so do you remember day trading? I showed you this not long ago. So this was a buy, this was a buy, this was nothing, this was a buy, this was a buy, this was a buy, and it collapsed. Okay. Then it gapped down yesterday, hit the bearish target. Okay. Weighing all the lines, all the lines. Come on, dude. Stick with me. They're just daily pivot points. Okay. Top of the trend, bottom of the trend. This is the sweet spot for rebuying. Sure enough, on the sweet spot, today's pivot profit zone, that's the buy zone for bulls. Did you know that? And there's a 50% retracement. That's how you day trade, guys. You look at it and say, well, I believe the market's bullish. And I believe this is a 50% retracement from peak to valley. And that if this opens between the M2 and central pivot point today, I would be a buyer. Oh, snap! Right? Triple bottom, right? So this is your daily buy zone. And your trade plan for the day would be somewhere up in here, take some profit. This is day trading. Okay? And those are daily pivots. Okay? And so you would have bought somewhere in here, and your conservative target is there, 150 pips for the day. Thank you. And then if I was a bull, I would say, you know what would be just super sweet awesome, just super sweet awesomeness would be to do it over again here tomorrow. So if I was here in Asia, oh my lord. Lordy, we's like the pody. We don't cause trouble and we don't bother nobody. All right? Just a day trade, guys. No big deal. Okay? So let's set this up technically. Maybe you can see it this way. Oh, faux show. So maybe it goes a little higher today, like this maybe, and then it drops in here and bye, bye, bye. Okay. Actually, it was, we were at 92, and he said it was worth 80. And then it dropped to 80, like, in 2 weeks. It was just 1,000 pips straight down. And then we were there, and then he's like, no, it's worth 72. That was Governor Stevens of the Reserve Bank of Australia. And it's just like 2,000 pips for free. Thank you, Governor Stevens. And that's why I renamed my children. Meet my son, Governor, and my daughter, Stevens. It's weird, but, you know, it makes sense. All right. Day trading, what do you think? What does the previous day say? Let me get rid of the fib while you answer. What does the previous day say? Oops, that's not what I wanted. Objects. Fibbo, delete. Cool. Yeah, let's do that. Delete that. That was just simply the buy zone based on the swing. Governor Stevens, dinner time. You're so silly. All right, since no one wants to answer, it opened out a position, and it says when you get to the green zone, get out. Get out quick is what it says. Okay? If you're a bear, going back to here, there's your double top. You were super happy about that. Remember, there was a monthly pivot up there. Anyways, you superseded that, right? It was the monthly. So you saw the monthly coming. You're like, oh, man, I'm a bear, and it's been rallying for days. If I can only get a double top, holy snap, double top, lower low, lower high, what do? That's a 1, 2, 3 reversal. Super easy. Sell the retracement back. We call this the scene of the crime. Oh, and there's your sell zone using daily pivots. Super easy. Lower low, lower high, right? This was your sell zone for yesterday, but it was so bearish on this that you had the price action sell, which is this, right? So you could almost consider that a front run, but the thing is it just wasn't. And it opened out a position here, right? Notice how it just went back into the consolidation area, sold off there. Hit this target, and you're supposed to be out. Okay? See, this one didn't open out a position. This did open out a position. Okay, so you're like, oh my God, this is hot. This is dropping like a hot potato. We're going to slam into the pivot profit zone, and then I need to get out. Okay? And then since everybody got out, you can see the wicked volatility here. Wicked, right? So then bulls come back in and say, aha, there's my double, triple bottom, very similar to like this one. So now your day trading bulls say, all right, well, we got our support, and this pivot makes sense. A lot of these guys are going to need to take profit. Oh, and I have to reemphasize this. This is approximately 50% of the retracement from last month. So this is on top of this exit zone. This is generally, not specifically, generally a buy zone if I can only get a pattern. Oh, how about a double, triple bottom? Right? So then today opened up in Asia. This is the buy zone for today's daily pivots, right? Then you get this move here, London open drop, roll reversal, up, right? Now what do? You grab this, you drag it across, simple price action. So you buy that dip, And now what? You're up into the pink zone. You're not looking to get in. You're looking to get out. Well, what if it goes, what? Dude, what if what? What? What if what? What if it goes higher? So what? It's a day trade. Were you going to make an extra $1 million? Or are you just supposed to do what you're supposed to do? Oh, but what if it get... But what if it... No, there isn't what if. Well, the money management part is being the trader. That's what traders are concerned about. Because once you're in the trade, you got to manage the trade. Now, the trade itself should be fairly easy. Like a lot, you'll see. Like once you start this other process, right? Because you've tried just mastering technical analysis alone, and you're like, well, it's very inconsistent. Well, no, you're very inconsistent. Technical analysis is consistent. You're just not very consistent of being a bull or a bear. So you're sometimes buying at support and sometimes selling at resistance, but also sometimes buying at resistance and also sometimes selling at support. And you're getting very inconsistent results. Well, the market's consistent. Bulls generally buy where bulls generally buy. Bears generally sell where bears generally sell, right? And the bigger trends and cycles take hold, and you're skipping all of that, right? Do you plan day trades the day before? Well, sort of, like end of the day, Asia session, right? I mean, my God, you should be at your charts during the Asian session, right? And you're like, well, I'm in Slovenia, I can't trade the Asian session. Well, okay, then you need to be, let's say, 2 hours before the London Open, you need to be at your charts. Okay? And in that case, you're going to be kind of in, let me get rid of the macro trade. So this was your trade plan. Okay? This is, all right? So you wake up and you're sort of in this period. So if you're at the, see, this is a couple hours before London, right? So if you saw this, it's a blessing. You're like, oh, thank you. Thank you. And God, super, super easy. That's a super basic day trade, a triple bottom, higher high, higher low. Buy it at the central pivot? Like, right? Like, right? Right? Like, right? Like, right at the right time of the day, too? And once again, right? Once again, if you don't know what I'm talking about, when I'm sort of laughing, I'm being facetious here. But still, if you don't know what, like a triple bottom, had a 50% retracement, in a daily pivot buy zone is, followed by a higher high, higher low, pre-London central pivot buy. If you're missing part of that, then you're missing a giant piece of education. And maybe that's where your inconsistency is coming from. You still don't know how to trade, right? Big suggestion here. FX Bootcamp has a lot of training videos. You should know this stuff is all I'm saying, okay? Then let's say you're late, though, and you don't get to the game until the London Open. And you're about here. What do? Oh, look at the big candles, big green candles, big green candles. Should you buy it? Look at it rally and just skyrocket. Well, you probably have tested this over the years and found when you start buying green candles at the London Open, you end up losing money, right? Or if you start selling red candles at the London Open, you tend to lose money. But you could say, well, in the context of what's happening, and in the context of my day trade, which is buy it at M2, go to M4, okay, that's your day trade. That's your strategy. Now your tactics, right? So the strategy is like, let's clear out Fallujah. All right, easy. Well, then someone says, hey, do you realize we have to kick down every single door in every single house in this city of like 300,000 people, right? Yeah, well, up, down, down, buy. Up, down, right, buy. There's a lot of work that needs to get done. But if you're here, just wait, roll reversal. This is just now price action. It's also using a pivot, all this kind of stuff. And you buy this dip in the roll reversal in the context of the move for the day. And then you're up to here. Fortunately, now if you're in New York and you show up, you missed it. Well, you should have been over here, bro. Right? You can't show up in New York and then start buying in the pivot profit zone. Now, you can start counter trend trading, but we also know that that's fairly dangerous too, right? So we don't know how many bears are going to actually sell here. We don't know how many bulls are going to buy back into here. And then this is where weekly pivots come into play. This comes into monthly, right? So remember how I taught you, I don't know, a week, maybe 2 weeks ago? I started with a 4-hour chart and I did a monthly trade plan. Then I went into a 1-hour chart and I did a weekly trade plan. And then I went into a 15-minute chart and I did a daily trade plan. And that the daily and the weekly and the monthly theoretically should all kind of be going in the same direction, right? You know what I mean? And so if you're already a bear, this would be irresistible. If you busted out this chart and said, well, Wayne, my trade plan for the month is we're heading down here, and I simply see this as a bounce, and now you tell me that this is an M3 of the month or something, or a central pivot for a month, do you have permission to sell the heck out of that? Well, yeah, sure. If that's your analysis. Okay? We don't see any of that because this is simply a day plan, right? Right? Double bottom, right? Look at this buy, profit, right? No opportunity to buy, so you walk. You didn't trade that day using daily pivots, right? Next day, buy, profit. Next day, buy, profit. Next day, out of position, no opportunity to trade that day. And then this was a buy if you're still a bull. And that there was a sell here and here. If you're a bear, then the next day here, this, right? This day, and then now we're up, down, up. You have to make decisions first. You need to know if you're a bull on the pound yen or a bear on the pound yen without looking at your chart. Okay? Okay? Are you a bull or a bear on the Aussie yen? Well, I'm concerned about macroeconomics. Okay? But what? If I was a bull, I wanted to buy it here. Dipped further than I would like, but it hasn't made a lower low. Okay? Remember I set this one up in front of everybody? I don't know how many people, probably 3,000 people saw this step by step by step by step trade plan that it made, move 400 pips? Cool. Does that mean you should be a bear now? Well, one thing I like to ask myself is, do I believe this trend, if it is a trend, does it have conviction or does it lack conviction? Is this definitely going up until the end of the year? Well, in this case, if I believed it did, if bulls were on board and we were definitely heading up, then I would continue to buy. Okay. Now let's kind of break this down. How do I feel about, where do I get my conviction about its conviction? Well, I set this double bottom, higher low, higher high scenario based on the monthly M2. Oh, and I reversed the entire bearish market. You're welcome. Okay. Now I have to decide, is this high higher than that high? Visually, sometimes I'll use shapes to do that, and I'll say, well, this used to be a high, and then there's our low, and then we're here. Is that a higher high? Right, let me just kill this part. Is this high higher than that high? And you can see it's not even missing it even slightly. Okay. And if so, what does that mean to you? If that higher high off of a predicted low, off of the monthly M2, if that now makes you a bull, what are you expecting? Well, you're expecting some sort of retracement because you're only supposed to buy dips, and then you're expecting a higher high. So that's what your new trade plan is. Buy this dip and rally it up. Okay? Then you have to identify, well, where would the dip be? So you go back to this bottom, and you're like, well, that's a 382 Fibonacci retracement. How does that make you feel? Look, I'm being as accurate as I possibly can. It's exactly a 382. Now, you might say to yourself, I wonder if people had orders there ahead of time. Is it possible someone picked up the phone like, yeah, I would like to buy the Aussie dollar around 81.40 because of the 382 Fibonacci retracement? Yep. You got that? Yeah, great. Have you ever phoned your orders in? That's old school. I used to have on my phone, I'll never forget because my wife brought it up, on speed dial. Remember speed dial? I haven't used speed dial in forever, but anyways, you had like 5 numbers that you could call quickly. Anyways, number 1 was the GFT trading desk. Number 2 was my wife. Yeah, why not faction ordering? I remember one time I'm like, the order didn't execute right, and the trade put me down for a $14,000 loss. And he's like, 1 second, please. I'm like, okay. Like 10 minutes goes by. He's like, yeah, you're right. It was our mistake. And he credited back to 14,000. I'm like, because at the time you're like, this ain't good. This ain't good, right? Yeah, it was something on their side. And then I remember one time, about the same time, I had an FXCM account too, for some other reason I can't remember. Anyways, and something happens, and I'm out like I don't know, $3,000 or something, right? And I call him up, and I'm like, yeah, so yeah, your stupid platform froze up or something, didn't execute, whatever the problem was, but I'm out $3,000 because of your mistake, right? You know what the FXCM response was? That's the risk you take when you trade with an online platform. We suggest you consider, I don't think they even suggested considering anything. I was going to say you call in, I don't think you could call in your trades at FXCM, right? So anyways, they're just like, that's the risk you take when you trade with an online platform. Our mistake, your loss, $3,000. Meanwhile, just a couple of weeks earlier, GFT is like, yeah, you're right, our bad. Here's your 14,000 back. Yeah. But I was a baller over there too. I was doing like $1 billion a month. They had a full-time employee. They had a couple, because they had to trade day and night. There's at least 2 full-time employees, and their job was to clear my trades. It's not bad. Well, so here's the thing. At the time, there was basically 2 schools of thought. You pay your broker a higher spread, and you get full service. like a dealing desk you could call, you could talk to the traders. If there was a problem, they would research it and all this kind of stuff and take care of yourself. So because I was trading a lot of money, I was with GFT, and for many, many years, like I said, I had my own dealing desk, my own employees. We had our own NFA, procedures. And the NFA went to the GFT trading desk and like, okay, where do you clear Wayne's trades? All right, this chair at this desk clears Wayne's trades. All right, how many employees? All right, where's the manual? So they had to create a manual and all the procedures. All right, so what happens if one of Wayne's trades don't clear and it's the middle of the night? What is the procedure? So they're like, okay, well, first you text. No, text wasn't even running. You email, and then if there's no response within 10 minutes, you phone them, right? And so they're all this kind of stuff. But you had like this full service Goldman Sachs model. And then you had FXCM, which was more like Charles Schwab, discount broker. And they're like, nope, there's no support. There's no nothing. There's not this, not that, but you'll save a pip. And I'm like, give me I want Goldman Sachs. So that's what it was like back in the day. Oh, and then fast forward another 5 years, FXCM sent out an email to everyone with accounts, live accounts only, I think. And they said, we have changed our policy because they were just audited by the NFA. They have changed their policy. They will now slip their trades for you, not just against you. There's an email somewhere. I'm sure I have it somewhere. And I'm like, they sent that out? What? I mean, they're just admitting to thousands of their clients for the last 10 years that they've been slipping all their clients. So what I'm getting at is like, you got the cheaper service, right? Because you were saving on the spread, but then they were slipping you. So you got the crappy service to save a pip, but they were slipping you a pip anyway. So you end up paying full price for the crappy service. Just like, wow. And if your cousin works at FXCM, don't get all upset. I've been to the FXCM offices. I've met the CEO, and all that kind of stuff. I have no problem with them, but they sent that email out. I mean, this is just their literature. Hey, half a pip in, half a pip out. You don't know the difference. So anyways, what's your trade plan, son? So if you are now a bull, let's just say you love this. You just love it. You're like, that's definitely, right? Because here's your low, here's your higher low. You believe we're going up here. That's where you drop into your dailies, right? Like I showed you on the pound, right? And you're like, okay, I know where I'm going and I know why I'm going there, right? So now I'm going to trade my way to get there, right? And that's where picking these daily pivots, day trading is, I mean, look, let's put it this way. Let's say it's Monday morning, and you look at it and we open up, or you're already late, but let's say the market opened up at monthly M2 on a new month. So, right? Cool. Where are we going? Well, Banda, I've been doing this like for so long that it's all the same to me, but obviously it's not all the same, but it melts down into the same thing because I'm still scalping my way into every one of these trades. So I scalp into swing trades and I scalp into a monthly and I scalp into a weekly and I scalp into a daily. And therefore, every trade I take is a scalp. Because if you can scalp profitably and then put a strategy behind it, then you become more consistent. So it's all the same thing to me, okay? So what I would have you start with, Banda, is start with swing trading and like monthly and weekly swing trading with price action. and in 5 years, you can get better. Okay. All right. So yeah, MM4, correct. Thank you, Raymond and Peter. So with that in mind, if you wrote it down and everything, you have the trade plan, you wrote it out, you printed it out, you literally on a piece of paper wrote it out. My trade plan for the week, or for the month, I should say. This one doesn't, I was going to add the watermark, it doesn't have it. Is that we are going up here. Okay? You can't even see it because these are all just daily pivots. But what if you planned it out, wrote it out, you have fundamental reasons why, technical reasons, right? All that kind of stuff. Your monthly target is there, the weekly target's here, and you know this is a 50%. Cool. So you take your first shot here, but now you know what you're going to do tomorrow and the next day and the next day. And now you're using technical analysis of these daily pivots. And what are you doing? You're buying dips. And then you're setting up the next day's trade. Well, we know, since you know how to trade with pivots, we know that somewhere in this area here, we're going to be buying. Preferably at 147, ish. Okay? And we're going to take it up to here. All pre-planned. Okay? And what does this tell you? As I mentioned when we were in the middle of this, you are supposed to take profit, and you're now deciding, or should have already decided, whether you bought this dip in the role reversal or just walked away. And the reason for it is because eventually, if you want to buy it down here, it needs to come down. So why keep buying it as it falls? Why not just buy it where you're supposed to buy it? So now you have tomorrow's trade plan, and you've already got it planned out today. And you're like, Wayne, well, what about New York? And I'm like, what about New York? Right? See what I mean? Okay. What time is it? Oh my gosh, I went way over. I'm really sorry, guys. I apologize. I didn't know what time it was, so I apologize. Thank you for attending. Please subscribe. Please like. Please leave a comment. What? Please subscribe. Please like. Please leave a comment. Would you do that for me? Thank you so much for attending today. Thank you for being a client to Trader's Way. If you're new to these webinars and you're enjoying them and you're finding them helpful, please visit tradersway.com and open up a demo account and give us an opportunity to earn your loyalty and your respect and eventually your business when you are ready and confident in your trading skills. I will see you tomorrow. I'm already looking forward to it. Peace on earth. May the pips be with you. May your profits be above average. Thank you.